Welcome back to the channel. My name is Brad, and today we're going to talk about the CLO ETF market. What's out there and what you might want to consider. That is what you're looking for. Stick around. So my name is Brad, and I've been retired now for a little while, and I look at CLOs as an investment for income in retirement. Maybe it's for you, maybe it's not. Let's look at these. So we have different types of CLOs out there that are ETFs. Everything from CLOs, which is triple Bs and double Bs, all the way down to triple As. And you can see distributions range from anywhere from 9% to 4.78%. But I just want to throw this out. These are not 100% risk-free, even though there's never been a triple A ever go bankrupt. It's not risk-free. We're just going to throw that out. So the first comment is going to be where to get those percentages. And those percentages comes right off of this sheet. Tells me the last distribution and their current price. And I just did the math. The last distribution, not the average distribution, didn't take 12 months or any of that. I just took the last distribution and did the math to come up with the current distribution rate. As you can tell, that's a Google Doc. And for mid-tier members and above, I've made a spreadsheet page out on the website. So if you're a mid-tier member, you can go out and look at the member side of the website. You can see that my portfolio is out there, the cash ETFs, the baby bonds, the business development companies, CLO ETF sheet that we're looking at, CLO closed-end funds. And now I also have a high yield spreadsheet that's already out there that we're going to be talking about over the next couple weeks as we move forward into exploring other things that you may or may not want to be interested in. It's totally up to you. Not financial advice, legal advice, or any other advice. Just showing you what is out there. If I look at just the triple A tranche, JAAA, PAAA, CLOA, AAA, TRPA, CLOX, PCLO, ACLO. You can tell there is a lot of players coming into the marketplace. There's just a lot of them. Now, we do have some history with some of these funds. Your JAAA and your PAAA, we have over a year's worth of history, and you can see how this has been total returns over the last year. If I knock out some of the newer players and just go with some of the older players and extend out that date a little farther, you can see how these have done over the time period. Total returns, not that bad, not that great for triple A's. And the most recent stock market move also caused credit spreads to shift, and we got a little volatility. But we're going to look at how big of a percentage those actually were. If I narrow it down even farther, just to JAAA, PAAA, CLOA, and AAA, you can see how they're doing ever since July of 2023. But let's talk about the most recent occurrence. There was a spike in the credit spreads, and we're just going to talk about how that affected this on a price chart as a percentage. You can see that AAA dropped all the way down to negative 3%. That was a pretty big move for something that's paying 5%. But you can see how the price has slowly recovered over time since then. And you can see that PAAA went negative, but it's already back over in the positive. It just depends on when you purchased it. If I move on to a little more high risk, triple Bs, double Bs, and anything that's got a B in it. You got claws, JBBB, CLOI, CLOB, BCLO, and PCMMM. There's the list. You can see how they're doing. You can see that there is fluctuation in their total returns over that last year. You can see price change over the last year. Oh, we had the big move. It went down, some of them 5%, 4%. You can see that they're slowly climbing right back up in price. If I take the ones that I'm interested in, claws, JBBB and CLOI, you can see how they did over the last year. Up, down, 9% total returns. Not that great, but a 9% payer, 3% down compared to the market dropping 20%, might be something that you're interested in retirement as a source of income. If I extend these out until January, so just over 2 years, you can see that clause and JBBB has a total return of over 30%. And no, it is not a straight line, but it's up and to the right, fairly consistent. If I look at price change over that same time period, besides the most recent downturn, we've had some price fluctuation on a lot of these funds over time, but still not that bad considering the stock market. So when I talk about credit and credit risk, you can go out and look at Bank of America AAA corporate index adjusted spread. And as the spreads increase, you can tell that they correspond or somewhat correspond to price fluctuation and total returns of these funds. You can see how these have done over time, and you can tell that they're going back down. And during periods of volatility, when the spreads are higher, you notice that the price will have more fluctuation. But when you notice that when we go down to a low adjusted spread, you'll notice that the price gets very consistent up and to the right. Now, lastly, I wanted to throw this out just for everybody to get a total glimpse of this. Clause, JBBB, and SPY on a chart. And you can tell 28% total returns compared to 45% total returns of SPY. But you can also see SPY has a lot more ups and downs than these funds. Just something for you to consider. Not 100% safe, something that could go up and down in price, but if you're not selling and only taking distributions or reinvesting those distributions or doing whatever you're doing with it, you can tell over time it's a pretty steady climb up and to the right. And just to let you know, when we look at AAAs, this is where your banks are putting your money and then paying you those yields. So they're doing that little game of, yeah, give me your money so I can go invest it here instead of you investing it there. Let's face it, it's Bank of America where those adjusted credit spreadsheets are coming from. Just make you think about where is your actual money going when you put it into the bank. So hopefully you find this entertaining and educational. And for members, mid-tier and above, go out to the website. You'll notice all those spreadsheets are now right there for your convenience. You can click on them and look at them at your leisure. And as more information comes in, I'll update those spreadsheets. So until next time, God bless.